Welcome to the SpreadX Weekly Financial Market Preview. We're going to look at Micro Focus International. They've got interim results coming out on Wednesday.
Yeah. I think they must be the worst performing FTSE 100 company this year. I think they're down nearly 50%. Basically, all of that coming within a single session. Back in March, they announced some serious revisions to their sort of full-year revenue forecasts. I think they said that previously, for the 12 months to the end of October, they'd been expecting a 2% to 4% decline. That got downgraded, I guess, to a 6% to 9% decline, which is massive. Obviously, investors were not happy, categorically not happy with that. It sent the stock, I think, at one point, the stock was down 55% in a single session. And the main reason behind that decline in revenues because they're struggling. They bought Hewlett-Packard Enterprise's software division last year. I think it was over $2.7 billion or something like that. And they've struggled to integrate that company into Micro Focus, and there's some costs related to that. Revenue not performing, divisions not performing as strongly as they should. All of those things affecting revenue for the year and painting a fairly dour picture of the company at the moment. Back in May, then they announced sort of another update. They said that for the results for the end of the 6-month results to the end of April revenue would be down 9% to 12%. They'd already announced that, but they said that it'd be at the better end of that. So I think in terms of the reaction on Wednesday, it's really going to hinge on how close it is to that 9% end rather than the 12% end. And I guess whether they announce another revision to the 6 to 9% decline expected for the 12-month period to the end of October. If that could even be brought down to sort of shrunk to 6 to 8%, that could be taken as a positive for investors. Because we've seen our clients are fairly heavily buying around the £13 mark. I think they're looking for some kind of rebound just given how poorly it's performed this year. And I guess they're hoping that all of the bad news is out of the way now. I guess the big question will also be half-year earnings, things like that. How much of earnings been impacted by the sort of rather sharp decline in revenue? But like I said, our clients sort of buying, looking for some kind of bounce. It's the kind of company now that the slightest bit of good news will perhaps have a disproportionate effect on its stock price. I think that's what our clients are looking for heading into Wednesday.
Okay, thank you very much.